This week we're going to be discussing reinsurance. Last week we did insurance. What was the purpose for insurance? And we said that it was to indemnify insurers, a person who have insurance. It's basically put money back into your pocket. It's basically to reimburse you. Most insurers are just focused on profits rather than indemnify insurers. In the past, I've seen insurers look for more reasons not to pay claims rather than reasons to pay claims. Basically what reinsurance is, it is insurance for insurance companies, right? As a person who purchases insurance, the local insurance companies, they purchase what's called reinsurance, right? You might ask, why is it that an insurance company has to purchase reinsurance? Reinsurers are investors, okay? They have access to billions of dollars, and they put it up so that insurance companies can have access to it. They're businessmen, right? They operate from Lloyd's and other reinsurance intermediaries, right? Depending on the types of risk that comes through the door, you have what's called reinsurance underwriters taking risk on behalf, of the insurance companies, etc. So, if an insurance company in Grenada, for example, says we have our properties insurance, we have $10 million worth of property. An insurer or a couple of insurers would take interest and share that risk that the insurance company is bringing. Now, in the event that the insurance companies don't have losses, what happens is that the reinsurers, they're the one who profit. They take the majority of the premium that is paid, right? And they give a small portion back to the insurance companies. Some goes to brokers and agents and stuff like that. Why the insurers would buy insurance? Imagine a person's house is valued at, let's say, $300,000, and the premium it might be like $1,500. Right there, you can see that as an unfair trade, okay? Because a person is giving an insurance company $1,500, and they're saying, I want you to give me $300,000 when the time comes. It's an unfair trade up front. Okay, it's not like buying a bread in the shop where the bread costs $3, you pay $3 and you get it back. You're basically buying a promise, okay? And you remember when you buy that policy, the insurance company gives you a promise that they will pay your claims when that time arrives. Insurance companies, they can either purchase 100% reinsurance, or they can buy reinsurance in different tiers. Like I said, an insurance company may decide they don't want to accept any large risks. So they may say, for hurricanes, we want to purchase 100% reinsurance, basically meaning that all claims have to be paid by the reinsurance company and not the local companies. Because remember, they have insufficient funds. The premium collected is insufficient to pay claims for catastrophic perils. That's like, for example, hurricane or something like that, right? So they will buy, they can purchase 100% reinsurance, they can buy a certain percentage. Some time ago, there was a particular insurance company that went bankrupt here in Grenada. And the main reason for that is because they had insufficient reinsurance. Okay, I know a time in the past we had meetings and it was suggested to that particular company that they should have reinsurers because they was operating in the market selling property insurance. They didn't have adequate insurance for catastrophic losses. On a normal day, if a person was born, yes, an insurance company, could, they should have sufficient funds to reimburse for just one house. But when you have 1,000 homes at 400,000, 300,000 per home, whatever it is, local insurance companies generally don't have sufficient funds. So that's why they rely on the reinsurers. Concerns regarding whether the local companies don't have reinsurance. It's something that I've heard a lot in the past, okay? But I'll tell you what, remember, we now have GAFIN in the market. They are mainly responsible to ensure that all local insurers have adequate reinsurance. So, persons shouldn't really worry about that too much these days. I usually tell my clients that's already taken care of, And for example, whatever concern my clients have, is my concern also. So for example, whenever a person comes through the door, it's like I know the things that they want. So I already make sure that whoever we deal with have adequate reinsurance. Also annually, GAFIN, the financial authority, they do reports. And they give brokers reports on the insurance companies, each and every one of them, and their the profitability, etc. How much losses they take on, how much money they make, you know, whether they have reinsurance or not, what percentage, etc., etc. So like I said, reinsurance is not something I'd worry about too much these days, right? It's just a matter of the client having the adequate coverage. It's something that one should worry about more than anything else. From time to time, you know, premiums go up, and it's something that most persons, policyholders, they're troubled with. You know, why is it that my insurance had to go up? I never had a claim last year, or, you know, since I've been with this particular insurance company, but all of a sudden they're telling me that my premiums will be going up. Okay? Now, remember, when it comes to reinsurers, there are insurance companies in the region worldwide. Okay? Now, what happens is that when the region experiences hurricane, the reinsurers, they would raise the premium across the entire region so that they will make back that money which was lost. Okay? Now, insurance operate as what's called a pooling mechanism. You have the pool of money collected in Grenada, you have the region, you have internationally. Now, what insurance companies and reinsurance companies do is that they monitor the premiums collected to the claims paid, right? You call that your loss ratio, okay? And what happens is that once you have catastrophic losses, they monitor how much premium was collected over the last years and whether or not the claims exceed the premiums collected. Once the claims exceed premiums, it means that the reinsurers have made a loss, right? Now, if the local companies want to have reinsurance in the coming year, the reinsurers will then raise premiums in order to get that money back with your loss, right? Now, like I said, insurers these days has to be profitable for the insurance companies and the reinsurers, which is the primary reason why premiums will go up, okay? Yes, they will pay a claim, but at some point in time, as long as they are experiencing the losses would exceed the premiums collected, premiums will go up. So it doesn't matter who you are with. Once the reinsurers say that premium has to go up, there's absolutely nothing that can be done. But I'll tell you something which is good though. When premiums went up in the last 2 years around the region, 80% of my customers, their premiums did not go up. The insurance companies that I dealt with, at least one of them, they froze the premiums, meaning that for all those existing policyholders, they maintained whatever premium they were paying. For new policyholders, they raised the premium. So again, that's one of the advantages of using the service of an insurance broker. It's not, your premium wouldn't always go up. And like I said, I make recommendations to insurance companies.